Hello and welcome to a special primetime edition of The Hash. It is consensus. Day one is pretty much in the books and it's been a big day. I am joined by Naomi Brockwell, Ben Powers, Jen Sanasie, and filling in for Will Foxley is Adam B. Levine. Thank you so much for being here, Adam. Woo! We're going to get this thing going.
Pew, pew,
we're
pew,
doing
consensus.
We're doing a special edition. Consensus has been big. It's been a big day. Consensus day one, big day. And we got
Bitcoin's pumping. Let's do
it. Ben, let's do this thing. I'm going to kick it off to you. Let's talk about Ray Dalio. He really stole headlines today. What's up?
Absolutely. So speaking of consensus and making news, billionaire hedge fund boss Ray Dalio, founder of Bridgewater Associates, spoke to CoinDesk for Consensus 2021 and made waves with some of his comments. Now, let's see what he had to say.
Yeah, I think Bitcoin's greatest risk is its success. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin and they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond.
Yeah, so we got a lot of choice quotes here. We got cash is trash. We got Bitcoin is better than a bond. And we had Dalio kind of dropping the fact that he actually is holding some Bitcoin. So I want to get the group's reaction to this. But Adam, welcome to The Hash. You picked a heck of a week to do it. So let's get your reactions first.
Thanks, Ben. Yeah, I think that, again, it's a hell of a statement. And what's interesting isn't so much that it's true. It's that someone like Ray Dalio is actually saying it, right? For a long time in the world of cryptocurrency, this has been the narrative. It's not that Bitcoin is doing anything particularly interesting. It's that the rest of the world is effectively going crazy. And in going crazy, it's making Bitcoin look like a sane alternative. That sane alternative basically means that when a government has a great idea about how they should spend money that they don't have to spend, well, right now they just kind of do it. And then it has repercussions that reverberate through the economy, through the global economy, if we're talking about the United States. Bitcoin doesn't really have that as a function. If you wanted to change the monetary policy of Bitcoin, then you would basically have to get the majority of the people who are participating in the Bitcoin network to want that, which is a very different proposal than we see in central bank ordered monetary policy kind of around the world today. So I think it's a hell of a statement from him. And frankly, he's right. He's totally right on the money. That is the biggest risk that Bitcoin faces, is not anything to do with Bitcoin. It's the government's reaction to Bitcoin as it really starts to steal some thunder.
And so recently we saw Bridgewater Associates CFO leave for NYDIG. And I kind of at the time was talking about that as, oh, does this mean like Bridgewater Associates isn't necessarily going to be embracing Bitcoin or anything along those lines? This seems to maybe point at that not being the case. And there is some appetite for this, particularly as an asset class, and particularly talking about, for example, cash is trash. Naomi, I want to toss this to you to get your reactions, given, obviously the high profile of Dalio, particularly in this space.
So, I mean, the cash is trash line, I think, is just so great and so true. And we talk about it on the show all the time. We're always on the show focusing on the amount of money that has been printed and mainly looking at like M1, M2 money charts when we show them. But there's another interesting chart, which is the velocity of money, which basically means how fast money is moving through the economy. Now, if you look at these charts, it's kind of like been going down for a few years. And then 2020, it literally just went, poof, everyone stopped spending. And at the same time, the government is printing so much money, unprecedented amounts of money. So what's doubly scary is you start to look at this velocity of money chart and you realize that once people start spending their money again, like the reason we haven't seen so much inflation so far, like we have seen it, as you mentioned already, Adam, we've got like, 4.2% inflation rate annualized. So they announced that they already said that it's higher than they expected. So we are already starting to see it creep in. But what's more is that people haven't really started going out and spending their money yet. And when that happens, when that velocity of money kicks back up to normal levels, inflation is just going to be horrendous and terrifying. And if people like Ray Dalio are starting to say this, then, I think people really should start listening to this narrative some more. And obviously, that's why people are buying into crypto so heavily.
Naomi, I do want to ask you something though. If someone is used to or traditionally used to investing in bonds, and that's something that they've just done their whole life, they probably don't have a huge appetite for risk. Would you recommend that those people just kind of ditch bonds at this headline and start looking at Bitcoin?
I think if they don't have a good appetite for risk, then they should be staying away from holding bonds from a government that is just printing trillions and trillions and trillions of dollars, right? Because that's a huge risk profile right there. If you're holding onto those things, you have to have enormous trust in the US government being able to pay that back. And that's diminishing very quickly for a lot of people, especially if you look at the size of the budget, the things that the government wants to spend money on. And then you just look at the fact that they're just printing more and more money. I mean, it's just, we're getting to a point where if they raise inflation rates, right? It's going to have to happen if the economy starts heating up. But if that happens, we've reached the point of tipping point in the economy where the government is going to be spending all of its GDP paying back interest on its own debt, right? So it gets to a really scary situation where they've kind of backed themselves into a corner. So yeah, if you don't have that sort of risk appetite, maybe you should be looking into other things. Maybe you should be looking into asset classes like Bitcoin. Maybe you should be looking into property. Maybe you should be looking into gold. These are all things that traditionally, when inflation starts to heat up, people really start to buy into.
Adam, I saw your hand go up. What you got?
By all accounts, like we're in an everything bubble right now, right? And so it's not really a question of risk or not risk. It's a question of systemic risk versus like day-to-day volatility risk, right? So that really is kind of the key to all of this, is that it is no longer possible as an investor, or even not an investor, even just somebody who just works for a living, to not be exposed to some sort of risk. So it's really more about choosing your flavor than whether or not you're going to have risk.
Yeah, there was a really strong sort of macro undertone to day one of Consensus. Adam, you were moderating a panel with like Lynn Alden and some other thinkers on this topic, and just some of the sort of macro underpinnings of the conversations that were being had at Consensus day one were really striking as a viewer of the first day's programming. Right, Ray Dalio is sort of like one of the final bosses of traditional finance, and here he is at Consensus day one saying, "Hey, not only are these big picture things, not only are these big picture concerns something that I share, but I also am invested personally in this asset." So to hear that from Bridgewater Associates, the biggest hedge fund in the world, was quite striking. And then whether or not that set the tone for the rest of the day, or just other people were thinking through that, there was just a lot of like really interesting comments about sort of the macroeconomic picture, whether it's timber or, like other asset prices across the economy, or copper or nickel or silver or gold. It was really interesting to hear those conversations play out over the course of the day in different flavors. So just the fact that we sort of had this Dalio thing kick off day one, I thought really worked well. I'll throw this back to you, Ben. I mean, what stands out to you about this comment? And, did it set the tone for the rest of the day, or was it just sort of this cherry on top of sort of existing conversations?
Well, first I want to ask, so you're saying Elon Musk was not the final boss. I just want to get you on the record with that one.
Well, we're going to get to that next, okay? I'm putting that aside for now. I'm putting that aside for now.
Yet to be vanquished, apparently. Who's to say?
I said one of the final bosses, man. Come on, I was hedging already. God.
Just like Bitcoin. No, I think it's interesting that this conversation happened, particularly amidst, somewhat of a downturn in Bitcoin. We saw prices go as low as, I believe 30,000, over the past couple of weeks, and then are coming on the back up now. And I think it really shows kind of the long-term environment that investors and Dalio himself is probably looking at around this, right? This isn't like a short-term trading play or these sorts of things. Like, these are things that they're, kind of hedging against, like a lot of underlying economic influences that are being exacerbated due to the pandemic and sort of unprecedented year we've come out of the last 18 months, excuse me. And so I think that's really important to be talking about this within that larger context, because I think that's also what has drawn all this sort of institutional support and investment to Bitcoin and cryptocurrencies as well, like given the time we are going to. But, Adam, you were talking about how governments, and Dalio might react to this. I'd be curious to hear what you brought to the table today.
Yeah, so the story for me today really was Kevin O'Leary. We're going to play a clip from him in just a second talking about some of this stuff. But bottom line, Wario may not indeed be kind of the big villain in all of this. I think that, again, there are lots of villains to go around, and some of them don't dress themselves up like that. Let's play the clip.
Well, the narrative is going to be shifted by the market itself. I mean, obviously, there's a lot of miscommunication and a lot of mistruths about it. The fact that there are miners in China and other places in the world, Iran, Iraq, Kazakhstan, et cetera, that are not really concerned about ESG issues because they've never had to deal with it, but they're still profitable miners. New mining operations, new investments in mining are very, very, let's call it, hip to the issue. They get it.
So the particularly interesting part to me about all of this, Kevin O'Leary, my second favorite shark after Lori, talked about a lot of controversial things that I don't even really think he recognized as controversial. First, he talked about how that whole green Bitcoin thing, as opposed to China coin, was on the one hand really important, but on the other hand was something that most of the miners outside of China are already doing. He said, quote, "We have to find a voice. The industry that mines Bitcoin specifically needs to find a voice. The profit motivation behind mining Bitcoin is actually helping sustainability, but that voice is being lost. We have no voice. Miners have no voice." He proposed that mining companies actually go to these institutions, these big, investors that are out there who are playing around on the sidelines but are concerned about this, pitch them on their sustainability, and then get them to invest into shares of their mining companies themselves. Honestly, it actually felt a lot like an episode of Shark Tank, where Mr. Wonderful effectively tries to pitch an attractive, already successful business on why they need him more than he needs them, and of course get a better rate as part of that. Naomi, I'd love to throw to you kind of what's your take on this whole thing? Is this just like people who are late to the party looking for a way to get cheap prices and get kind of these investment opportunities to come to them? Or what do you see here?
Oh gosh. I mean, first of all, I have to have a disclaimer. I've never seen Shark Tank. But if I ever do watch it, I'm going to be predisposed to think of him as almost the alpha. Like number 2 is almost the best one there. Let me think on that for a little while. I'm going to throw this to Zack, to start off with and get his thoughts first. That may inform my opinion there.
Yeah, this just felt like we are living in a simulation moment where Kevin O'Leary was on Consensus. He said this, and I think like within a half hour, like Elon Musk was out there tweeting how he had met with several major publicly traded mining companies. And then, of course, Michael Saylor got in on the moment, and he was like, I brokered this meeting. So the fact that all this was coalescing,
$50 million in Bitcoin.
I want to know who the Bitcoin miners are. Like, is there an association? Who are these people?
Well, these are big companies. Yeah, there is now, but these are big companies. These are publicly traded firms who are who are available on stock markets. You can invest in them right now. They're often seen as Bitcoin proxy stocks for investors who don't want to tolerate the risk associated with holding Bitcoin itself. But so Elon Musk, by way of Michael Saylor, connected with these Bitcoin mining firms to sort of ride the wave of this big environmental concern that the Bitcoin markets are seeing right now. Right. And so the fact that this happened, I think within an hour, maybe even a more compressed time span than that, just felt so weird and sort of disorienting that here we are at Consensus Day 1 having these conversations about ESG and how it relates to Bitcoin mining. And sure enough, Elon Musk goes out and tweets something about that very fact. And then Michael Saylor jumps in to add to the intrigue. That to me, beyond sort of the merits of what's being discussed and the merits of what is being discussed are very important to unpack. But beyond that, it just felt somewhat bizarre that this was all unfolding in a very compressed time cycle. So I'm going to throw that back to you, Naomi. Maybe that primed the pump for your thoughts.
Yeah, so I mean, this whole mining energy debate is like super interesting, especially with Elon saying, well, I'm getting all these people together. We're talking about this. I've made them commit. Because we're seeing a huge reconsolidation, I guess, of mining at the moment with the crackdown in China and everyone just kind of pulling out there. Like a friend of mine just mentioned to me that, he's in the process of buying tens of thousands of miners from a company that's essentially just been shut down in China. And then they're moving to America. And you're seeing what is it? 30% of mining is happening in China at the moment, which kind of is what primed Elon's initial thoughts when he was saying, well, it's the coal that I'm most interested in, because the vast majority of Chinese energy comes from coal, right? But it's interesting because now they're all talking about renewables and all of this, and we already have the figure that about, let's say conservatively, 30% of Bitcoin mining is renewable. Only 11% of American energy is renewable. So, it's like, it's not actually that good that all this stuff is moving to America and moving out of China, which was using a lot of renewable energy. It's just very interesting what's going on. I think that it's very difficult to pin down the actual numbers here, as people have said, because a lot of it's just kind of pulling numbers from the air and making guesstimates about what's actually going on in terms of energy consumption and what's renewable and what's not. And so it's just very difficult to get an accurate picture of what's actually going on. So to see all these major players kind of chiming in and talking about this with, when we have this very vague situation is kind of interesting. But Zack, I'll throw it back to you.
Yeah, I mean, I think we're really seeing the beginnings of a narrative war, right? Like we had Marty Bent on a mining panel today who was saying, Bitcoiners need to resist the ESG scam. The premise of this debate is a false premise, and we need to resist that premise. And then you have another contingent being like, okay, yeah, I hear that. How can we align Bitcoin mining with some of the values of ESG investing that are becoming a bigger part of the conversation right now? So the fact that these two sort of factions were represented so cogently, I think, over the course of today's programming was really fascinating to me. And the fact that it was crystallized by this Elon Musk tweet really just speaks to how contentious I think this is going to be going forward. Adam, I'll toss it back to you on that.
So I just have one real quick thing, which is, man, I wish that I was a fly on the wall in that room while they were having this meeting. I imagine it would have gone something along the lines of, we're very concerned about energy use. And then they say, well, we're very concerned about energy use too. That's why we're the greenest industry in the country. And then he says, well, but that's not what people say about you. And then that's how you wind up with this agreement, right? Where it's like, we're going to standardize reporting and we're going to talk about it in a different way. But I mean, that's the whole point, is decentralized networks are messy. Decentralized networks don't have leadership, right? And so when you're looking at mining is this ad hoc thing that's become industrialized. And now I think we're starting to see it become institutionalized. And that institutionalization looks effectively to be a partnership with the big institutions that are out there in kind of the larger investing world. So it's just funny to me. I just see, ways for people who have come late to the party, trying to find ways to buy in as cheaply as possible, by intentionally misunderstanding these things in very public ways, which then drives the narrative in their direction. Jen, I'd love to get you in on the conversation. What are your thoughts here?
Well, I think you need to have both sides of the conversation to get to those concrete numbers that Naomi was talking about, right? Like we're hearing a lot of speculation. Everyone, it just feels like they're chiming in to be at the top of the news. Everyone's talking about ESG. So maybe I'll tweet something about it. Maybe I'll bring a committee together. But I think this is what it takes to get those concrete numbers and to get to some cold, hard facts and to actually make a plan forward. If we all just kind of sit around and don't talk about it, or just say like, actually, it's a pretty green industry, so we're not going to talk about it, nothing's going to happen. So I'm just interested to see what happens next.
All right, well, I'm going to step in here. I'm going to step in here. We are going to take a break. Thank you so much for joining us in this special edition of The Hash. It's Consensus Day 1. We're recapping all that was shared there and so much more. We're going to take a quick break, and then after the break, we're going to talk to a pioneering NFT artist, Josie, about how they are capitalizing on the current moment. We'll do that after the break, so stick with us. Good stuff. See ya.
It's hosted on an Ethereum-based testnet called Rinkeby. Desk does not have a monetary value and cannot be traded for other digital assets or fiat currency. The Taurus wallet has been chosen to support the rollout of Desk. The Desk beta is open to current and previous attendees of Consensus, as well as attendees of our Unlocked 101 series. All you need to do to start earning is head over to coindesk.com/desk, enter your email, and claim using your access code. Make sure you're registered for Consensus by CoinDesk 2021 to get in on the action.
Hello, and you're watching a special edition of The Hash where we bring you the latest and greatest in crypto and culture. So that was just Jenna Pilgrim. I'm just going to throw everyone for a curveball here. She just texted me and said, if I say desk, everyone watching this show is going to get dropped desk. So I've now said it a few times, so you're welcome. All right. So we are being joined by a special guest, artist and designer Josie Bellini. Started her career in crypto art in 2017, and she has a very special auction launching tomorrow with Christie's. She's here to tell us all about it. Hello.
Hey guys, thanks for having me on the show. I'm super excited to be here.
Hey Josie, great to have you.
Really excited to have you. We don't
Thank
often
you.
have guests.
Yeah.
It's a new thing we're doing.
Well, I feel honored. Thank you.
All right. So, Josie, you participated in Consensus. We have a virtual art gallery that everyone who's attending Consensus can visit. Why don't we start there, and then we'll venture off into the world of Christie's. So there it is.
Yeah, this is really exciting. Cool. Consensus has been, I exhibited in person at Consensus. In 2019 was the first year I think I went to that conference in particular, but having it in this virtual space where it can live forever and people can go visit right now when we're not really doing in-person conferences is super exciting.
Yeah, I really kind of loved venturing around in the gallery, and some of the art you can actually play. There's videos down there, and we often talk about the metaverse on the Hash. So I would just love to hear your views on the metaverse as someone who got into crypto art in 2017. Where do you see this whole NFT space going?
Sure. That's a pretty big question, and I guess I'll break it down into a couple things and let me know if you want me to dive deeper on something in particular. But the really exciting thing about NFTs and what we're going through right now is just the mass potential. We have 4.6 billion internet users in the world, which are connected to this global uncensorable financial system, which is crypto. And then we introduced the idea of digital property rights, which is NFTs. So you've got one of the world's largest market that is connecting so many different things together. And really what we're doing is we're flipping this paradigm of the internet from value extractive of users to value additive, where the users are now the owners, which is what makes things in the metaverse really exciting. We think about things like Facebook and how really we're using Facebook and they actually end up capturing all of the value in those interactions. But in NFTs and in the metaverse and this new internet, users are actually owners, and we can earn value by using a platform, playing a game, interacting with artists or other users on the platforms. And then if you bring that even further, we're seeing that creators can get deep insights, and I can talk more about that too, but creators can get deep insights into what their users are doing, how long someone's logged into something, what they're viewing, what is selling at higher prices than other things, what works for their community. So you can see things directly that we've never been able to see before. And it allows us to reward our collectors, different virtual reality users on levels that weren't possible before. So really the metaverse, it's such an exciting thing to think about. Like I said, with all of these markets converging in one place in a way that it's never happened before. Art, fashion, gaming, collectibles, like all of these markets on their own are multi-billion-dollar markets, and we're finding a way that ties everything together, if that makes sense, with the metaverse.
Yeah, that makes a lot of sense. So Josie, one of the things that we've really seen so far this year is just an explosion in interest from people who are not necessarily crypto or blockchain natives, who are now coming in and are very interested in understanding, how do I interact with this space? If you were giving yourself advice a couple of years ago, right, when you were a little bit newer to the scene, but you have the experience that you have now, kind of what are the important things that someone who really wants to understand how to interact with this space, but doesn't really know where to get started? I'm not asking about platforms. What are best practices? Do those even exist yet?
Yeah, there definitely are some best practices, but just on that note of what you're saying, that people are getting interested in NFTs or the metaverse, but they don't even know about crypto to start with. That's something that is totally unique and really exciting about NFTs when you think about it. We're not talking about, I don't have to teach my family members and friends what money is and why our government isn't necessarily doing it right. And all of these different things. Money is really confusing. Things like NFTs are not confusing. And the way that we connect with NFTs and the reason why we buy NFTs is totally different than the way that we would invest in cryptocurrencies. So I would recommend to someone who's getting into the space, find something a community you are really connected with and passionate about. The amazing things is that Twitter and Discord can basically connect you to any community you want to be in, and you can find out anything about that project firsthand from the users within these Discords. So everything is really connected. Go out there, find something you're interested in, because the reason why we buy NFTs is because we have that emotional and personal connection with them. It's not always purely based on just an investment purchase. So that would be my recommendation. And then, of course, we do have some education to create just around NFT assets being stored on the blockchain and what is the safe way to be storing those items, because they can have a lot of value, whether it's sentimental or actual value as well. And we do want to make sure that we're storing things in a safe way, just as we would store our crypto in a safe way.
And so you kind of made your bones coming up as like a Bitcoin artist in a variety of ways, but obviously a lot of NFTs are based on the Ethereum blockchain. There have been some kind of motions towards, trying to do NFTs on the Bitcoin blockchain. Do you see a future there? What are maybe some of the benefits or some of the limitations, particularly as we see, gas fees continue to be sort of a victim of their own popularity in this case?
Yeah, Bitcoin NFTs, we started there, right? So there were Bitcoin, or there are Bitcoin NFTs. Ethereum NFTs definitely took off in a different way. And a lot of that has to do with the ease of writing smart contracts, and Ethereum was made for that sort of thing when a lot of ways Bitcoin was not. And there are just different, I'm not technical, so someone can correct me later, but there are different ways that these things have to be done. But there are talks of Bitcoin NFTs coming back. And I know some really amazing folks in the space that are working on that sort of thing and platform to make that happen. And we're also seeing art be more and more embraced in a digital way with Bitcoin. And we look at Scarce.city and they're doing auctions in Bitcoin. We're looking at all those sorts of things that we see this slowly going towards that way. And I know collectors personally that don't buy anything on Ethereum and are waiting for that moment where their Bitcoin art can be on the Bitcoin blockchain or connected to that versus Ethereum. So I'm definitely excited about the prospect there. I think there's still a lot to be done. And in both cases, like I said, a lot of education that has to be done of how these are being actually created and where they're being stored. And when you are purchasing an NFT, what that actually means and what you actually own.
Josie, I just wanted to say, first of all, your art is incredible. It's so amazing. And I love the Ross Ulbricht one that I saw there. But I think I first saw it several years ago at the Satoshi Roundtable. And it was set out on a table, like physical table. And what was striking to me even then is because we're so used to seeing artwork, physical artwork. But your work added this element of integrating it into the digital world, even pre-NFT craze. You were doing all of these augmented reality pieces where, if you put your phone camera up to one of your art pieces, suddenly your phone would start doing all kinds of weird things and it would show you a different image to what you were seeing in real life. I just thought it was the coolest thing. And I wanted you to talk a little more about some of the innovations we're seeing in the digital world and some of the things that you're seeing in the NFT world, programmable art that different people can control, that can affect the final product, all of that sort of stuff. Like, what's most exciting to you right now?
Thank you. By the way, I'm honored that you remember seeing those, and it's amazing because the AR that the augmented reality that I was first working on was for like T-shirts and prints and business cards and stickers, and then finding a way to be able to translate that to NFTs was really, really exciting for me, and just finding a way to bring technology into my art, which at the time, now it's a bit both, but at the time all started as a physical painting. So finding a way to bring physical paintings into the virtual realm, into mixed reality with augmented reality, and just doing all of these sorts of things was really exciting to me. And that is what I love so much about our space in general, is how innovative everyone is and how fast things move and how you have to be on to the next thing. But to your point, there's so much technology being tied into art. We're looking at things like async art, for example. That's a platform. When they launched, we did a collaboration. Myself and 12 other artists did one piece together for their launch artwork. And now it's been, a year and a half since then. And they're a platform that they have this concept of layers of artwork that create a master. And the really cool thing is all of these different layers are different NFTs. And the artist can set parameters of what the collector can actually do with their NFT. So instead of just a static piece, a collector can decide to rotate the piece. They can decide to hook it up to their own personal longitude and latitude and have the sun or the night and day cycle transition based on where they are in the world. There's so many different things. You can have it connected to Ethereum price, Bitcoin price, and have the art actually change and be dynamic based on all of these different parameters that the artist has set up. So we're seeing technology go just really far in art, and we're seeing all of these innovative ideas, which are so amazing. And they definitely don't stop there. We're going to see that continue to happen. And that's what people want. People want things that are more immersive and leveling up and more usable, more real, just things that are different than what we're used to seeing. We're hoping not to recreate the traditional art market, but bring something fresh and new to it.
Hey, Josie, I wanted to ask you this question. I mean, we've seen sort of just the excitement around NFTs really ramp up. The Beeple auction was sort of captured captured the imagination of the mass population. You too are going to be doing an auction with a traditional auction house, I think tomorrow, actually. I guess my question is, after we see this excitement, in your view, what does, the Gardner hype cycle, right? There's this plateau of usefulness. We see these peaks of interest, and then we see a plateau of usefulness. I think NFTs do have some staying power. So I'm very curious for your view personally about what that plateau of usefulness looks like for NFTs going forward.
Sure. I think there are a couple of things. Like I said before, people are purchasing NFTs for a different reason than they would be purchasing, typical investment assets. They're purchasing them because they truly connect with them on a level that they're willing to spend whatever they're willing to spend on it. I think that the NFT space has seen some craziness recently, and like any market should level out. I don't think that multi-million-dollar sales back to back is sustainable by any means. But I think that just like with any market, we have to find that balance point. But I do think that NFTs bring something different to the table in terms of that emotional and deeper connection. And not only that, the functionality also, because we're seeing NFTs that were created, even years ago with something like CryptoPunks, for example. And we're seeing different games be built off of CryptoPunks, different projects being spun off of it that have no connection to Larva Labs, the group that created CryptoPunks. We're seeing people turn them into 3D avatars to be used in virtual worlds. So we're seeing all of these different things where NFTs don't have to just be that static one item you have, but if you have it, you can earn from it. You can, put it in a lending pool. You can get a 3D avatar from it. You can do all of these sorts of things, which make it a little bit more exciting. And not only that, we see really, really tight-knit and communities growing in each little NFT pocket. For example, I did a puzzle in one of my art pieces with CryptoKitties, CryptoVoxels, Decentraland, and the whole crew. And anyone who participated in the puzzle, even if they just tried, they got a 3D gas mask matching the piece to wear in VR in CryptoVoxels. And I can go in World today and I still see people wearing that gas mask from the puzzle that happened a year and a half ago. And it gives this automatic connection between us. And I'm like, oh, they played the puzzle, or oh, they own this, or whatever it is. So there's these different ways that communities are deeply connected through NFTs, where it's not just this like one-time transaction, if that makes sense.
Yeah, that makes a lot of sense. Josie, thanks so much for joining us. We're going to change gears here. Good luck with the auction tomorrow. And thank you so much for your time.
Thanks, guys.
All right, we are indeed going to shift gears. We're going to go to the regulatory environment. A16Z goes to Washington. That's what we're going to talk about today. One of the managing partners at Andreessen Horowitz, which is a major crypto venture capital firm, told U.S. lawmakers today that the lack of clarity from the SEC is really hurting the ability for average investors to participate in the upside of crypto token investing. This is a theme that we talk about a number of times, this sort of gray area, this lack of certainty. What's a security? What's not? What's in it? What do you need to be an accredited investor for? What can the retail investor participate in? And we saw managing partner at A16Z, Scott Cooper, I think his name was, go to DC and voice some of these concerns. So I'm going to kick this one to Naomi off the bat. Naomi, what's your take here on A16Z sort of trying to push the needle on regulatory clarity in DC?
I think it's absolutely necessary. I appreciate that they're doing this because there is a lack of clarity. People don't, I know of so many projects who repeatedly reached out to the SEC to say, how do we do this legally? How do we do this legally? And the SEC responded and said, we can't tell you, but we can tell you what you're not allowed to do. And there was just no guideline on whether what they were doing was actually okay. And so you end up with these people piling everything they have and all of their time and effort and building communities around these projects only to be told years later that what they're doing wasn't actually legal because the SEC hasn't quite figured out what is legal and what's not. But if we're talking about like disparities and, people who like disadvantages for ordinary folks, the SEC creates a lot of that. There are all these accredited investor laws at the moment that basically preclude ordinary people from investing in the same things that rich people get to invest in. Cryptocurrency was meant to be the great equalizer that took down those barriers to entry, that said, we're outside of all of this, bureaucratic structure and you can access things now. You can get access to the same upside as people with a lot of money. And that's exciting because it's not sort of patronizing people and say, well, just because you don't have as much money, it means that you're not as educated and you can't make smart decisions. So, we have to protect you and put laws around it and say you can't actually participate. Crypto was meant to solve that. Now the SEC is coming in and saying, actually, this is security. Therefore, it also applies to accredited investor laws. And therefore, people in the US, only if they're an accredited investor, can actually participate in this. So it builds back those disparities, builds back those barriers to entry. It's not what crypto was meant to be about. And we really need to break those down and get clarity from the SEC and just equal the playing field again.
Yeah, this was a bit of a double shot on regulatory push today. Earlier today, Coinbase announced that it hired a Goldman Sachs head of government affairs to run its policy shop. So it's interesting that we're seeing both Coinbase sort of escalate its policy efforts. A16Z, obviously a very prominent backer of Coinbase, speaking to U.S. lawmakers today. I'm going to throw this to Adam. What do you see as sort of the next front line in this sort of push for regulatory certainty out of Capitol Hill?
So I actually think that, to Naomi's point, the problem, so I think that it's very tempting to be like, the opportunity should be for everyone to invest in these things because this is a technology that is egalitarian, that is open to anybody. And I see that argument, but on the other hand, I really actually think that that's almost a secondary argument to have around this. The real one is just that the lack of clarity makes it so that people who are very concerned with following the law just don't touch the stuff, right? And it means that it creates this space. Yeah, which is a lot of people. I agree. Again, I have personal experience with this. Back in 2017, I had created a product called Token.fm that was basically a media tokenization platform that was ready to go. And we were going to launch an ICO and then backed off because the Dow report had come out and our lawyers effectively threatened to quit. And I'm a guy who takes big risks with technology, but not big risks when it comes to legal stuff. And I can tell you that as someone who tried to play by the rules, that was basically the equivalent of banging your head against a brick wall for 4 years while waiting for the government to say this is or isn't okay. And spoiler alert, they never said anything. So it's that lack of clarity that makes it so that the only people who really get involved with this space are people who have a risk tolerance where it's okay if they're maybe doing something that winds up being illegal later. And that means that a lot of good actors just don't do it. And that's bad for everybody. Zach?
Something highlighted in the comments was it's not only risk tolerance, it's the ability to pay lawyers to fight this fight, right? To bang their head against the wall on behalf of deep-pocketed venture capital firms like Andreessen Horowitz, which have invested widely across the cryptocurrency space for a number of years. So the fact that this was brought up in these remarks, I thought was also interesting. I'm going to throw this to you, Ben. I mean, I think the regulatory stuff is quite interesting. I think it's interesting that we're seeing more lobbying engagement from some of crypto's key players. I'm going to toss this to you for your take on these remarks today.
Yeah, I think like this is the frontier that isn't going away. That's going to have to be fought, right? Like I would be a little bit more charitable maybe to the SEC if we hadn't gone through this in like 2017, right? Like there was a whole boom around ICOs and there's been now like 4 years to get something coherent together in this regard. And Adam, like you referenced, there's just kind of been crickets, or there's been like inklings, and like, you know, reporters like ourselves are kind of forced to look at the tea leaves and try and interpret these things without any clear sort of like regulatory guidelines. And I think that's really problematic, you know, like I absolutely advocate, like, you know, do your own research. I'm not sure if the SEC has been doing their own seemingly because nothing's come out of this in this regard. But I do think that, you know, this is going to be the battlefield of the next one. And we see like Coinbase staffing up. We see, you know, like other people staffing up in this regard. And we see sort of like the lobbying arms of crypto starting to come together in a concerted way. So I'm always fascinated by these sort of incremental regulatory battles because they do hold really big implications for the future. Adam, as you referenced, Naomi, as you've referenced. But yeah, that's kind of my take on this news.
Yeah, the focus on bad actors and on not establishing clear guidelines was a critique levied against the folks at the SEC. But we're going to talk about some potentially bad actors, I think, coming up after the break. Naomi, what's next?
We are talking about some scammers who ran off with a bunch of money and left a very interesting message for all of the investors behind on their website. So we will show you what that is after the break. Welcome back to The Hash, everyone. We are closing out the first day of Consensus. And to start off this block, I want to talk about a scam that everyone was talking about today. And it's kind of sassy, but also awful and kind of reflects the state of the industry right now. So there is a protocol called DeFi 100. Now, they were meant to kind of be like the S&P for DeFi finance. You know, it was on their previous website, which actually looks great and legit if you looked at it. It was an idea that you would have this single token to invest in the entire DeFi sector. Kind of this interesting idea. And anyway, lo and behold, you go back to their website and a new message was put there. The new message said, "We scammed you guys, and you can do about it." And then it says afterwards, it says, "Haha." I know. Well, I mean, they laugh at it. They say, "Ha, all you moon boys have been scammed, and you can't do about it." So, like, on the one hand, I mean, how sassy. Like, it really is for them to turn around and be like, "Yep, overt scam." There's no two ways about it. It's no like, "Oh, are they coming back? Are they, like, what happened here?" And some people are trying to project that on. They're like, "Well, maybe they got hacked. Maybe this isn't actually them talking." They literally spelled it out for us, right? So I want to throw this to the group. Like, is this a reflection of the state of crypto right now where people will just walk away with with a ton of money, you know, put up a convincing website, walk away with a ton of money, and then laugh at everyone for falling for it. I'm going to throw this to you, Ben, because you talk about a lot of scams. You do deep dives into those. What are your thoughts on this one?
I mean, on the other hand, this is why the SEC doesn't maybe say anything, right? Because there are so many dang scams in this space. And this one, you know, was a little bit more interesting, I think, particularly as we're looking at all the ways that DeFi has been spun up over the last years and all the different variations on that. It's on the one hand, it's really curious to look at like an S&P 100 for you know, DeFi and have a single token that could ostensibly let you invest in various DeFi protocols, if I'm reading this correctly. On the same hand, that's also kind of sketch. That's like a big proposition from a tech perspective and from a variety of others.
Minute.
And so, like,
I gotta pipe up for DeFi Pulse Index.
Okay.
This is not a new concept. DPI is an established project that does something similar. So the idea has some veracity, but the execution here, iffy. Back to you, Ben.
Sure. And maybe, you know, it should be noticed that it's spun up on Binance Smart Chain, which we've talked about before as a place where it's notoriously easy to just spin up any kind of token you want there. And so if you give people, and maybe Zach, to your point, if you give somebody a project that looks like a similar project that has a sort of a unique value proposition, then people might be more willing to buy it. You know, we saw like various kind of Uniswap clones like emerge out in this DeFi space. And so to me, this was maybe a different scam than the ones that I've quite commonly come across. But again, just a reminder that it is out there, it is lurking, and always be on your toes.
This reminded me of when Hester Peirce said, "Don't come crying to us when you lose all your money." She wasn't speaking about any scam. She was talking about Dogecoin. But we spoke about the PancakeSwap hack last week, and now this scam that I feel so bad that it's making me laugh because I always get so depressed about scams on this show. But it just kills me that this is happening and we're trying to get people more interested in DeFi. We're trying to introduce a mainstream audience to DeFi, and these things are happening and then people are getting laughed at. It's just, I'm back into my feelings. It's just sad.
I'll be a grumpy Gus here. I mean, this is, I think, reflective of the get-rich-quick moment in which we were in prior to last week, right? So, you know, there were any number of BSC-based tokens that were just mooning in the last month, and so the idea here is that these communities of people, whether ill-intentioned or not, you know, they try to latch onto the next big thing, the next big Australian safe shepherd, the next big X-rated token name that I will not mention here. And the fact that people were willing to rush into this based on the promise of those future gains sort of speaks to the mania that I think we've seen around some of these DeFi, these meme tokens that have sprung up with extra rapidity on the Binance Smart Chain specifically. So, you know, I guess this is a do your own research story. Maybe not. It's also just a bad actor's story, and we're probably not going to escape that in a permissionless system anytime soon. So this is one of those things that I think is part and parcel with the crypto economy for now. But I will toss this to you, Naomi, if you have a take.
Yeah, I will add to that also, I mean, just because it has the government tick of approval doesn't mean it's not a scam. Like Bernie Madoff was literally the head regulator and he ripped a bunch of people off. So you're not going to, no one's going to save you from being scammed. You know, you may try, you may set up these systems. There are no promises out there. One thing I'll also mention is just going back to their website. Like, honestly, it looks really good. They've got their white paper up there. They've got all these awesome animations. Like it's a high quality website. And I think that generally when we're thinking of scams, we might think, oh, well, I'll go there and it'll be written like those Nigerian print scams and there'll be like exclamation marks and like lowercase and uppercase and I'll be able to tell. No, the job description of a scam artist is try to convince you that they're legit. So of course they're going to look like they're legit. So just because something looks legit, just make sure that you're digging deeper than the surface, make sure that you're finding out like who's involved with this. Try and do as much research as possible because these things are really, really convincing and there are a lot of them in crypto. But Adam, I saw your hand go up.
So, I mean, I'm going to try and out old man Zack here. So we are firmly in silly season.
We love to do that on this show.
Right? Like that's really what it comes back to for me is that so I mean, like, there's so much money in this to get it right as a scammer. Everybody's here. Everybody is concerned because they already missed out on so many gains that they perceive that if only I had bought Bitcoin in 2015 or 2017, then I could have got all of that. And they feel like they don't have much time. And so everybody is in a hurry. And when you see these new types of projects come out, what's going to be the next, sushi? What's going to be the next kind of all of these things? People don't take the time to do the research. And it's easy enough for us to say, well, do the research. But the reality of it is that people aren't making these investments based on research. They're making these investments based on sentimentality, based on what's the name of this thing, how much traction do it's again, like it's a greater fool game, right? Where you're not doing something because you believe it. You're doing something because you believe that other people believe it. And in that type of an environment, being smarter than the market is the same as being wrong. So honestly, I think this is just a cost of doing business if you're going to be playing in these markets, because you can't afford to try to be smarter than the market, because that means you'll be wrong. So it's a crazy situation. But Jen, where are you on this?
Well, there's a word for that. It's called FOMO, and I don't think people should invest based on FOMO, but I'm going to take us off to our last story of the day, and it has to do with pizza. Staff at the biggest Dutch Domino's pizza franchise can now be paid in Bitcoin. So the franchisee is partnering with BTC Direct, and they're offering to pay their 1,000 employees in Bitcoin. So their staff can opt to take any part of their salary above the minimum wage. In the Netherlands, you have to take your minimum wage in euros, but any amount above that, they'll pay it in Bitcoin. And this was interesting to me because we always hear about these star athletes taking their salaries in Bitcoin. And here we are, we have a Domino's Pizza. This is a job that everyone can relate to. I'm sure we all had a job in the service industry at some point in our lives, and now they can opt to be paid in Bitcoin. So Naomi, I'm just going to toss this right down to you. I know you celebrated Bitcoin Pizza Day on the weekend. What did you think when you read this story?
I mean, so multiple things. First of all, I hope you guys enjoyed Bitcoin Pizza Day. I hope you actually paid crypto for your pizza, unlike all of the people who met, whether it was at Central Park or where was the big gathering where nothing was paid in crypto for those pizzas. I think it's great more people getting involved with crypto. I love that they're paying their employees in Bitcoin. I will caution it though, unless you're dealing with large amounts like footballers' salaries, right? Bitcoin becomes problematic with paying it as a currency. I mean, we saw Stripe. Stripe is huge. Like when PayPal got into Bitcoin, everyone went crazy, but Stripe got into Bitcoin like 2014. And then they got out in 2018. And they cited and they said, listen, Bitcoin has become more of an asset than a currency. Therefore, it's not useful to us as a payment mechanism. And I think that's spot on. Bitcoin really has become this store of value. People like MicroStrategy are talking about it. People like Elon Musk are talking about it. It's the way people, have their gold. So it's kind of like Domino's saying, yeah, we're now paying our employees in gold, which I think is awesome. I think more people should be paid in gold. But also, when you deal with smaller amounts, it does get harder and harder for people to then spend that Bitcoin because you have high transaction fees. Any UTXO that's smaller than like $20 on average a day, you're not going to be able to spend it because you'll lose money. So it does get problematic. But at the end of the day, I salute anyone who's getting involved with crypto. I think it's awesome that they're exploring this.
It feels like a little bit of like a marketing. Sorry, I guess to me, it feels like a little bit of a marketing push on their end. This is the first time I've heard about Dutch Domino's franchise chain X. And particularly, it seemed like a missed opportunity to capitalize on Bitcoin Pizza Day if it was not just that. So to me, I think, Naomi, all the kind of concerns that you mentioned up front is very valid in looking at this. So I'd be curious to know, more so than offering these things, right? I want to know what employees take it, kind of across the board. What are the ones that are really advocating? We hear about that more from kind of the player end and the NFL, Naomi, like you were saying, and sort of sports leagues, and not from the respective teams or leagues. They're usually going through a third-party payer. And so when a company offers this, I always want to hear from kind of the ground up, what are people actually doing with this, or are they taking it? So, those are the things I pay more attention to than maybe sort of the PR kind of aspect of it, which is what this feels like. But it doesn't, it doesn't seem like something that's going away, and we'll certainly see more of it.
Yeah, I guess I have another question on. So go ahead.
I was going to just say, I definitely do think it was a PR stunt, but I'm always the first one to say that we're talking about it on this show, so it worked. But Naomi.
Yeah, I just, wonder how they close that loop as well. Are they buying a bunch of Bitcoin and storing it there as like their treasury reserve and paying out of that?
Ooh,
or are they going to be accepting Bitcoin as payment for things? Because again, that gets problematic as well when you're talking about Bitcoin in particular. And, I think we need to address this one-sided point of view of hodlers as well, these diamond hands, and you should never get rid of your Bitcoin. It's a problematic narrative because everyone buys their Bitcoin from someone. Either they're earning it from, Domino's, who are also buying it. People have to sell their Bitcoin in order for you to get rid of them. So there are, half the people are not diamond hands, half of them are. And, I'm definitely of the mindset that we should be putting these things back into the economy and using them. And obviously that didn't end up happening with Bitcoin in particular. But before we go off on that tangent, I'm going to throw to you, Adam, and get your thoughts.
Well, so
Naomi,
Diamond
Hand Dominoes has alliterative clout. Come on, Naomi.
That's
You're
pretty
right.
good.
I take it all back.
So Naomi, I think you and I are of the kind of earlier generation of Bitcoin enthusiasts from before the scaling wars. And so you and I can remember actually using Bitcoin in that way. But that is not really the world that we're living in today. Personally, I see all of this as another step along the very long trail towards Bitcoin and cryptocurrency broadly becoming just normal, just boring, just a thing that working your job at Domino's you can choose to get paid in because it's just money or a form of savings. And certainly, again, like if you think about it, well, choosing to save in fiat currency isn't really proving to be a very good deal. You get effectively nothing on your bank return. So we're taking that money that would have historically been going into a savings account, yielding, 5%, 6%, something like that. Not in my lifetime, of course, but, my parents tell me that was actually a thing back in the day. And just putting it out there as a way where you actually can not just beat inflation, but maybe actually start to compound your savings. So, it's a much needed step. And again, we started with the sports on the one side, and now we're talking about dominoes on the other side. How much more normal can it get?
I think the incentivizing a savings vehicle is fantastic, right? The ease of this, the convenience of this. Okay, I don't have to decide that I'm going to buy $100 in Bitcoin. It's just part of my compensation. For people who are working at the Domino's franchise in the Netherlands, I think this is a fantastic opportunity for them, should it make sense for their financial planning, right? If this is going to be, if they need that money to buy stuff, not great. But if you can chunk out a part of that pay beyond your minimum wage to a savings vehicle such as Bitcoin as an asset, not Bitcoin as a currency, I think that's something that is going to be quite attractive for folks going forward. And I'm curious to see where these providers, be it Strike and Zap, be it the folks making this project happen. I'm curious to see whether or not that picks up some mainstream momentum in the months ahead. Whether or not this price, I think the good thing about this price volatility that we're seeing is that it forces these tough questions upon us, right? If I'm entering Bitcoin in a context in which Bitcoin only goes up, there is no tough questions to be had. If I'm entering Bitcoin in a context where, oh shit, I just lost half the value of my Bitcoin over the last week, that's actually an interesting question to be having. Is that volatility something that I can tolerate over a long time horizon to the point where it's advantageous to me and my financial planning going forward? So, the fact that we're seeing the volatility, hopefully it forces these good questions, and hopefully more people, weigh the pros and cons of doing this. And if it's going to be someone in the NFL or someone working at a Domino's, I think that's a great thing for the entirety of the population.
Yeah, the sooner we can get out of the traditional financial system, the better. As we started out this show with, people are thinking that everything's about to collapse. So it may be a smart move, as you said, Zach, for them to start considering it. But I think we're at the end.
We made it, folks. This is the first special edition of
it was unclear
the Hash
this was
during consensus. We did it, folks. We got episode 1 in the books, and there's so much more coming up at the remainder of this week. So I'm just going to tease a couple things that are happening tomorrow. So first tease, shout out to Adam. His NFT All-Star show debuts tomorrow, and that's going to be a really cool exploration of some of these big topics around NFTs and digital collectibles. Metacoven, Whale Shark, those are some big names in the NFT collecting space, and I think Adam's going to ask them some great questions. So I'm excited to check that out tomorrow morning. Consensus continues apace after that, folks. So we got a bunch of keynotes tomorrow. Michael Sonnenschein is talking. Rohan from Dapper Labs is talking. And extremely interestingly, given today's afternoon news developments, Michael Saylor is speaking tomorrow. We can ask him about that crazy meeting with Bitcoin miners and Elon Musk that he allegedly set up. So I'm pretty excited for Consensus Day 2. Consensus Day 1 was a lot of stuff happened, both during the event itself and in the greater crypto world. So there was a lot of news to be had. It's going to be fun tomorrow as well, because you know what they say, crypto never sleeps. So that's the situation. All right, I'm Zach. We got Naomi, we got Ben, we got Jen, we got Adam. We're The Hash for this week. We'll see you tomorrow night. Thanks so much for joining us on this special edition of The Hash. See you soon.
Bye.
See you next time.